Hello and welcome to another update video on FET. The FETCH.AI chart has reacted to micro support, which was located between 68.5 and 79 cents. This was our upper support area. A break below, would have been needed to confirm further that we're heading for a larger correction. That can still happen technically, but again, it looks more as if we are now pushing higher in this yellow scenario, which is our directly bullish scenario. In this scenario, and especially the increase in upside momentum now, it does suggest we could be heading towards the $1.17, $1.18 level next in the third wave, which is the 138% extension. So that's at the moment the third wave. And to keep going in this, I mean, the momentum is up, right? To keep going and growing here, the market needs to hold above the Monday low, or ideally the Tuesday low even, right? So these are the key levels. The stop is obvious, but now entering now is probably a bit late. The time was in the support box. That's typically why they are on the chart, not to tell you what to do, but to offer you a space where reward and risk is favorable. Because also here, right, in both scenarios, a reaction was expected in the B wave in white and the third wave in yellow. But at the moment, there's no sign that it wants to form a top there. So therefore, I'm tracking higher prices. Important, as I said, important is that it's holding here this Tuesday low, located around the 71.2 cent level. And upside momentum is continuing high. And there are these swing highs here that now need to be broken. That would be the next objective for the bulls. Okay, so you could say the next objective for the bulls to fill in the yellow scenario and form this C wave to the upside that we are tracking in a larger ABC pattern. The next objective is a break above the swing highs from the 12th of May, the 13th of May, in this area here, right? 11th to 13th, 91 cents is, you could say, a breakout point. But obviously, resistance is coming in, right? That's what we can see here. Why? Because the potential is still there that this is a B wave, which is a corrective rally. It's a three-wave move up so far, and we're holding just below these highs. We need to see that as next evidence for the bulls, that the bulls plan to take the price higher, that they are really motivated. And then afterwards, the focus can shift towards that $1.17 level. That's not just one made-up level. It is the first ideal target for a third wave based on experience of watching thousands of charts. It's the level that should be reached in a third wave. If this level is reached, then there is a decent chance that also in a fourth wave it's actually holding a higher low before we then can push higher. Now I can't really tell you yet where that fifth wave will end, because it depends on where the third wave will form a top. So we continue to take it level by level. If, for example, the third wave goes to the 161.8 extension, or even the 178.6 extension, then the fifth wave should get one or two levels higher. So if, for example, the third only gets to $1.17, typically the fifth would get to 136. If the third gets to 128, the fifth would get to 147. Ideally, right? Yeah, and that's what I'm currently tracking here. So basically, to confirm the white scenario and to confirm that the yellow scenario is failing, to invalidate it, we need a break below this week's low. Until then, the grind higher can continue, and we've now arrived at a key juncture. That's the update on FET. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.